Good afternoon. I'm OR President Reese Stewart. OR is pleased to provide you with this new series of daily live knowledge events. It's part of our efforts to provide the support and care of our members that our members deserve and the information they need. Yesterday on our Facebook Live event, we discussed how the Families First Coronavirus Response Act addresses matters involving brokerages and team employees. Today, we're going to discuss the COVID-19 stimulus and relief legislation that recently passed and what it means for independent contractors, brokerage firms, and real estate in general. Our panel experts will help shed some light on unemployment insurance, the Payroll Protection Plan program, SBA loans, and more. Joining us today are two attorneys from the law firm of Holland & Knight and Larry Stewart, client advisor from Seaside National Bank. Attorney Dustin Stevens specializes in the area of Florida real estate and land use law, and Steve Ball will share his expertise with us in the areas of employment and labor law. Larry is here to help with questions regarding the SPA provisions of the legislation. Special thanks to each of you for being here to assist our Realtor members as we navigate these complex issues. Let me remind our listeners that you have the opportunity to submit questions for our panelists. If you logged in online via the link, you can enter your questions in a box attached to the player. If you are on a phone, you can hit the number 3 and you will be transferred to one of our screeners who will take your question and put it in the queue. Before we begin, we need to disclose that Holland & Knight Law Firm represents Orlando Regional Realtor Association. Holland & Knight does not represent any member of OR or other listener on this call. The information conveyed or provided by Holland & Knight during today's town hall is for the general education and knowledge of our listeners. The information provided in no way constitutes legal advice or legal assistance. Such information is not designed to be and should not be used as the sole source of information when analyzing and resolving a legal issue. If a listener has specific questions regarding a particular fact or situation, he or she should consult competent legal counsel. Finally, please note that the situation surrounding COVID-19 is evolving and that the subject matter discussed today may change on a daily basis. Okay, let's jump right in with our first question. Steve Ball with Holland & Knight. Our first question is, Steve, as you know, as realtors, our members work as independent contractors. Can you explain the significant provisions and benefits for independent contractors, such as unemployment benefits, that are included in the new law?
Thank you, Reese, and thank you to the ORRA for having us this afternoon, and special thanks to all you members who have joined us on this call this afternoon, and welcome. Yes, I can answer that question. As you know, all of you all who are realtors who are independent contractors, you probably by now realize you are not entitled to any kind of unemployment compensation under Florida law as an independent contractor. And this, to my knowledge, has remained unchanged in Florida to date, even though we are in the throes of the coronavirus. However, with the passage of the Federal CARES Act, C-A-R-E-S, the CARES Act, which you probably are familiar with, or at least you've heard about, there is a provision within the CARES Act called the Pandemic Unemployment Assistance that would allow independent contractors to be eligible for up to $600 a week of federal unemployment insurance through July 31st if you're not otherwise entitled to unemployment insurance under Florida law. But in order to do so, you will need to be able to self-certify that you are able and available to work within the meaning of the applicable Florida law, and you are unemployed, partially unemployed, and we'll talk about what my feelings are with respect to partially unemployed in just a second, or unable or unavailable to work because of one or more of the following COVID-19 related reasons. If you are diagnosed with COVID-19, if you have symptoms of COVID-19 and are in the process of seeking a medical diagnosis. If a household member, one of your household members, has been diagnosed with COVID-19, if you are providing care to a household member with COVID-19, if a child or other person in your household for which you are the primary caregiver is unable to attend school or daycare due to COVID-19, if you are unable to reach work due to a quarantine, if you are unable to work because a healthcare professional advised you to self-quarantine, if you are scheduled to start employment and do not have a job or are unable to reach the job as a direct result of COVID-19, if you are the sole wage earner in your household due to the death of the head of your household as a direct result of COVID-19, and I certainly hope that's not the case for anyone who's on this call, if you were required to quit your job as a direct result of COVID-19, or your place of employment closed as a direct result of COVID-19. Those are the reasons that are listed under the pandemic unemployment portion of the CARES Act that would allow you as an independent contractor, assuming you could self-identify with one or more of those related reasons that I just gave to you. It should be noted, though, that if you are available to telework and receive pay for teleworking, it is very unlikely that you would be eligible for pandemic unemployment assistance. Now, how does one go about applying for the federal unemployment, pandemic unemployment assistance? The way that it's structured right now is that you would go through your individual state. In other words, in Florida, you would go through the Florida Department of Economic Opportunity, like one would if one were actually going to try to get state unemployment insurance. And although you're not eligible for it, they are the ones that are handling and will take your application to move it along for the federal pandemic unemployment assistance program. So that's what you would have to do in order to be eligible for federal unemployment insurance under the CARES Act, called the Pandemic Unemployment Assistance. But as before, as far as state unemployment insurance benefits are concerned, as an independent contractor, you are still not eligible to receive any state benefits.
Okay, and just another follow-up, Steve. Since Florida's shelter-at-home order deemed real estate services essential, does that mean realtors are not eligible for the new unemployment benefits for self-employed?
No, it does not mean that they would not be eligible, but again, you would have to be entitled to the federal unemployment benefits under the CARES Act for one of the reasons that I just described above. And also, you would need, again, to apply for the CARES Act Pandemic Unemployment Assistance through the Florida Department of Economic Opportunity, which will have the final say on what benefits you would be entitled to, if any.
Okay, great. Larry, this is for you. Is there relief under the SBA provisions of the new law for independent contractors?
Yes, this is Larry Stewart, and again, thanks to the Realtors Association for scheduling this call and for asking us to be a part of it. First, I want to say that the morning applications began to open up for the SBA program. The SBA sent out a 31-page adjustment to the program. So to say this thing is evolving as we speak is to say the sun is bright today. Independent contractors in that 31-page revision said that they would file separately. So they would file their own PPP application through their bank and apply for funding. And that would probably come, if it's granted, in the form of a loan. And then at the end of an 8-week period, the independent contractor would be required to show the expenses during that 8-week period that might be applied towards forgiveness of some or all of the loan.
Gotcha. And Larry, there's some brokers. We know there's brokers listening as well. Should a broker include their agents if they request for a payroll protection plan from the SBA? Or once again, should the agents apply for the pandemic unemployment themselves?
If agents are a W-2 employee of the agency, then they would only be eligible for individual benefits, which is a whole separate process, and those are sent automatically. If they are W-2 employees of the agency would file using their salaries as part of their justification for the loan, with the idea being that the firm would then be able to sustain employment during what might ordinarily be a drier period for revenue.
Okay. And since most a lot of realtors are 1099, not W-2 employees, would they file through the bank or through on their own as far as for the pandemic relief?
For the PPP program, yes, they would file separately as a separate requester for the loan program. Gotcha. It is. It's typically better if you can file with the bank where you bank with now, because there is a certain amount of vetting that needs to take place, and it's difficult for banks to get to know somebody in the madness that is surrounding this program and submit an application and do the vetting they need to do.
Okay. So go to their local bank that they bank with and get the information they need.
Yes. But the application is the same, and those, I think, are eligible in a lot of places. There's one thing I'd suggest is the application was changed Friday morning, and make sure you have the most current application. And they're a lot the same, but if you see at the top of the application that it says what kind of business are you, LLC, C Corp, S Corp, sole proprietorship. If you see 7 or 8 different options, then you've got the most current application.
Okay, thank you. Dustin, this one's for you. One issue that has come up during this pandemic is disclosure. Do we need to see a modification on the seller's disclosure requiring seller to disclose a positive testing and or a household member that had COVID-19, or will this fall under the same as, for instance, AIDS, death, suicide, murder classification, where that's not a disclosable item?
Yeah, hey, thanks, Reese. This is Dustin. I don't know that I would necessarily add it to the seller disclosure form, but I definitely think it can be distinguished from the AIDS, the suicide, murder exceptions as well. So I would say the short answer here is there's no clear legal answer to that. But if I were in that situation, I would encourage the seller to voluntarily disclose that information. So when you look at Florida law in general, the obligation, as I'm sure most of us know, is for the seller to disclose facts that are known to the seller but are not readily observable to a buyer. And those would be facts that materially affect the value of the property. So I think when you look at AIDS, that's something that, had a stigma associated with it, obviously, but clearly is not something that can be transmitted simply by being in the same room or same building as somebody that had HIV. Okay, that's just not how it works. Everybody understands that now. And then, of course, the fact that a suicide or a murder took place in the house, again, doesn't really, on a rational basis, affect the value of the property. And so I think so those exceptions are both by Florida statute. So those are things that the legislature at some point went out of their way. And, again, the reasoning was probably these aren't real risks we're talking about. These are kind of irrational stigmas, and the legislature specifically excluded those from required disclosure. So you can't say that COVID-19 is like that, because of course there hasn't been any action in that area. At the same time, I think it's questionable. I think it's questionable whether you could say this is something that materially affects the value of the property. But I would disclose it because I wouldn't want to be caught in a situation where I knew someone in a house had it, and then 3 days later a new buyer was moving in who didn't know about it. I don't think anybody here would. You're not going to bring prospective buyers into a house for a showing or an open house where someone with a known case of COVID-19 is residing. So why would you let someone buy and move into a house, certainly when you're still within kind of what's now commonly considered the window of transmission of a couple weeks, without disclosing that. Again, we're talking about something that's a pretty transient passing situation. I think you'd be better off disclosing and then taking steps to mitigate, doing a really good job of cleaning, making sure that, whoever had the virus has been gone from the building for at least a couple weeks, or whatever. But the only way that I would feel completely confident saying that there's no obligation to disclose is if we could find legal cases out there where there was another highly communicable respiratory disease like tuberculosis or Legionnaire's disease or something like that, and if there was a case out there where a court had found disclosure was not required in that situation. I actually did a little bit of digging, didn't find anything like that. Isn't real surprising. But in the absence of that, my instinct would be to say at least for now, in the situation we're in, if you find yourself in what I think is still probably a relatively unlikely situation of knowing that somebody has been residing in a house and then you're in the middle of a sale transaction, still I think a relatively unlikely scenario. If you find yourself in that scenario, I would at least advise the sellers that they should voluntarily disclose it, and without disclosing any personal information about the individual who had it.
Okay, great. As far as our 16,000 plus members, our members, our realtors, they go the whole gamut when it comes to how they practice real estate. And I got a question here, and Dustin, this is probably for you. We've heard quite a bit about rent and mortgage payment forbearance. Can you explain what those provisions call for and what possibly property managers should tell their residential and commercial tenants? And can you kind of talk a little bit more about forbearance and what that really pertains to?
Sure. So, we definitely need to separate the commercial side from the residential side. And then we also need to separate what's out there right now in terms of the borrower-lender relationship when it comes to loans, and then what's out there when it comes to the landlord-tenant relationship with respect to leases. So first of all, on the commercial side, there's no consistent or legally required forbearance out there, either with respect to mortgages or to leases. And by commercial, I'm not talking about multifamily residential or even investment residential properties, which we'll touch on later. I'm talking truly about commercial properties. But so anyway, in general, if you're a commercial borrower, and so we're obviously talking about a loan relationship with a lender, you need to get in touch with your lender and try to work something out, because right now there's no specific federal program that's requiring lenders to behave in any particular way or offer any particular relief. From what I've heard, it's easier said than done to get in touch with a commercial lender right now. They're obviously overwhelmed from a practical perspective, and then I suspect some of them are just purposely laying low because they don't want to make any promises, and they're trying to figure out what's going on. And then, similarly, if you're a commercial tenant, you need to get in touch with your landlord and try to work something out. Because again, there's nothing currently out there on the commercial side that's going to compel a landlord to offer a commercial tenant, any sort of relief. And then, so it's really a contractual issue. So if you're a commercial landlord or tenant, I would be reviewing the relevant lease documents, if you have time to do so. And I know that's tough right now, depending on how many properties you're dealing with. So although it is unusual that there will be language in a commercial lease that lets a tenant off the hook for financial obligations due to a pandemic specifically, or even force majeure generally, it's still best, again, if possible, to actually be familiar with your lease language in case there's anything relevant to the situation, so you aren't caught by surprise. That said, I'm seeing a lot of landlords, a lot of tenants right now that aren't taking the time to read the documents right now. They may not have the time. They may have just too much going on, and so they're kind of sending out, if you're a tenant, kind of sending out blanket requests or demands really for relief. Landlords are sending out blanket responses saying, look, we're sympathetic, we're willing to work with you, but we just cannot agree to a blanket pulling of rent. So that's kind of the forbearance issue on the commercial side, which, again, the forbearance would simply be a private agreement between either a lender and a borrower or a landlord and a tenant. And you got to distinguish that private forbearance agreement from governmental mandated suspension on foreclosure actions. So that in Florida, there's an executive order suspending foreclosure right now through May 17th. That appears to apply to all mortgages, not just residential, so residential and commercial. However, the suspension of evictions specifically applies only to residential, not commercial tenants. So again, just distinguishing between the forbearance situation and the foreclosure/eviction situation. Any foreclosure action that was close to completion is a foreclosure action that would have been in the works long before anything related to COVID-19 came up. However, probably not the case with evictions, because those can certainly move faster through the courts than can a foreclosure action. So in summary, on the commercial side, the only answer right now is to try to come to a contractual solution between a lender and borrower and the landlord or tenant. The other advice I would give is just in general, if you're a commercial landlord or a property manager and you get a notice from a tenant saying that they're just not going to pay rent for a while, period, I would make sure I do respond to that. I would respond to that in writing, and like I alluded to earlier, I would just inform them politely that you're willing to have a discussion with them, possibly work something out, but that just not paying rent isn't an acceptable solution. So I saw it summed up well, where it said if you get a statement from a tenant that says they're not going to pay rent, don't treat that as a statement from them. Treat that as a request that you deny. And then, if it's a tenant you're willing to work with, you need to ask them for information regarding their lost income, what their efforts have been to secure a small business loan, and what's their proposal to pay back rent over time. And finally, if you are a commercial landlord or working on behalf of a commercial landlord and there's a loan on the property, you can't agree to any sort of amendment or forbearance without reviewing the loan documents. And in all likelihood, the loan documents will require the lender's written consent to any forbearance agreement or any other amendment offering monetary relief. So that's kind of a summary of where things stand on the commercial side in a nutshell. On the residential side, with respect to mortgage forbearance, it's currently only mandatory for federal-backed mortgages. So that's about 2/3 of the residential market. And it appears that if it's federally backed, it does apply to all single-family residential mortgages, regardless of whether the underlying property is a primary residence, a second home, or an investment property. And so the requirements that have been put in place there on a federally backed mortgage for single-family residential property is the loan servicer has to show deference to a request for forbearance. So, they can't request a lot of backup information, at least at the current time. There's not a great burden to have to show a lot of proof. You basically just have to confirm that, yes, I have been negatively affected by the COVID-19 pandemic. Lenders and loan services aren't supposed to report any sort of forbearance to a credit reporting agency, so it's not supposed to have a negative effect on credit. And another thing that seems to be going on is it seems like a lot of lenders aren't exactly being forthcoming about the fact that the forbearance really can extend for up to a year. And it doesn't seem like there's a lot of limits on that, but it seems like for the most part, the lenders are trying to agree only to 3-month forbearance periods. But I would say if you're communicating with a lender, understand that I think the way it's really structured is that you're entitled to 6 months now, and then a 6-month extension seems like it would very likely be granted. So I wouldn't accept 3-month forbearance periods. Another problem that's out there right now is it doesn't seem like there's a lot of guidance about how the catch-up payments after the forbearance period have to be structured. And it looks like lenders are trying to take advantage of this, at least for now. And a lot of them are telling borrowers that they have to pay back the full forbearance amount pretty much immediately after the forbearance period is over. And this seems pretty impractical. So if you get 3 months of forbearance or 6 months of forbearance, in that 4th or 7th month, you have to pay back the full amount of those 3 months or those 6 months. How is that going to work for somebody that's been losing income for that amount of time? So hopefully that's something that the Federal Housing Finance Agency will release guidance addressing that issue. And then again, distinguishing the forbearance agreements, which at least with respect to federally backed mortgages is more mandatory, just distinguish that from a foreclosure situation, and foreclosure of all federally backed single family mortgages are suspended through May 17th. I think May 16th rather. So that, pretty much dovetails with the suspension of all foreclosures in Florida. Now, if you're a borrower without a federally backed loan, it appears that for now you're in the same situation as a commercial borrower, and you just have to get in touch with your lender directly, try to work out a forbearance agreement. But unfortunately, those lenders are not being forced to enter into forbearance agreements like the servicers of federally backed loans are. And I'd say it's currently too soon to say if private lenders are generally going to follow the Fed's lead. So then the final category, we've talked about commercial loans and commercial leases. We've talked about residential loans. So final categories with respect to residential leases. Although evictions are currently suspended throughout Florida, and rent relief on federally backed multifamily mortgages is being offered on the condition that landlords do not evict residential tenants. Okay, other than that, so you've got the suspension on eviction, you've got possible relief for residential tenants in multifamily properties if their landlord has a federally backed loan. Other than those situations, there do not appear to be any laws or regulations out there at the moment that would compel rent forbearance on the part of a landlord. So if you're a residential landlord or working on behalf of a residential landlord, if you want to agree to a forbearance agreement and you're with a tenant, unless you are being compelled to do so because you are in turn accepting forbearance on a federally backed mortgage. Other than that situation, if you're entering into a forbearance agreement with a tenant, you're either doing it, out of altruism, or you're doing it as a practical concession to the tenant. So when communicating to residential tenants, I would, whatever you agree to in terms of forbearance, I would make sure it's clearly communicated in writing, preferably signed by both parties, that forbearance is not the same thing as forgiveness, and work out a practical plan with that tenant on the front end for scheduling catch-up payments that will with the aim of making the landlord whole by the end of the term. So I think that covers the main categories of commercial versus residential and the lending situation versus the landlord-tenant situation.
Okay. That kind of leads me into question 7, which I think you've already answered. So basically, if any of our members have need any further details on any moratorium evictions or foreclosures, what's happening, they should probably pick up the phone and contact their legal professional and run it by them and see exactly how to handle that. That's what I'm hearing anyway, right?
Yeah, I absolutely agree with that.
Okay. Okay, and one other thing before we get into the audience questions, are there any other provisions in the legislation for the panel that addresses the financial loss a realtor or brokerage may experience as a result of this pandemic? Is there anything that the panel wants to put out before we get into the audience questions? Okay, hearing none and seeing none. Let me go ahead. Larry, the first question is going to be for you. What documents are needed to apply for the SBA loans?
To submit an application, one has to justify or document 12 months average payroll. For most people, that's the easiest way to get that is for the year 2019, and that's fine. Typically, people have payroll reports that come from ADP or something like that, or internally. That is fine. Remember that you have to take out any salaries for an individual that are over $100,000. So if somebody is making $150,000, you have to delete $50,000 from the payroll total. It is also acceptable to include the state unemployment tax, medical expenses, and retirement expenses in that calculation. But again, they have to be paid during the period that you're using as your base. So your lender will need to see reports that lay that out, and I would urge you to, if you put together a spreadsheet, send the spreadsheet, because if somebody's trying to figure out where you got the number, that's delaying the whole process. It would be also good if the lender does not have some of your financial statements on file, if you're not a current borrower, to include, say, the year-end numbers for 2019. The SBA is relying on banks to do some vetting of these applications. And if we don't have anything to vet it against and you're supplying a pretty big number for a request, we need to see something that we can say we're hanging our hat on.
Okay.
I hope that's helpful.
Okay. So the question I have again for you too is now, what about let's say like a realtor's or an independent contractor, 1099 employee? What would they provide to possibly get some relief?
The 1099 employee is probably going to be able to supply what they would with the business portion of their tax return. What is the income that I made? Then what are the expenses that I netted against them? And for the 1099 employee, it's almost an income statement type application that they're going to be making.
Okay. All right. Okay, and Steve, for those that might be able to apply for the unemployment insurance, can you explain how they would apply for the unemployment insurance?
Yes, again, you need to go to the state of Florida Department of Economic Opportunity. You can find them on the website, and you'll have to fill out an application through there. I will tell you that I know that they are being, as you can well imagine, swamped at this point in time. They're even trying to bring in, I understand, third parties to help them and assist in getting these applications done as soon as possible. But in order to apply for the federal pandemic unemployment, you need to go through your state. In this case, again, the Florida Department of Economic Opportunity. Call them or go online, probably, honestly, would be the best, because you're probably not going to get anyone to answer the phone, and fill out your application online, and then they will take it from there. You do not have to file anything with the feds. You just have to file it through the state, let them know that you're self-employed independent contractor, and they will take it from there.
Okay. All righty. And just for everybody to let them know, we're still getting questions about the 1099s. So I do want to reiterate what Larry said, and Larry, you can correct me on this if you want to. Just get documentation, your tax return showing what your business portion when you filed your taxes. Now, can I ask another question just for a clarification, Larry? Those of us that haven't filed their 2019 taxes, because if I'm not mistaken, they've given an extension till 1 July this year for for the file taxes. Do you think if they have their 2018 taxes, that would suffice? Your expertise on that one?
Reese, at this point, and we recognize there's going to be a lot of people in that situation, we are submitting the internal financial statements that the 1099 employee has for 2019. It wouldn't hurt to include your 2018 tax return because, again, the lender would like to see some similarity of income, as opposed to if you've only got internal statements. We kind of believe that what you tell the IRS is probably true, whereas the internal statements may have a little fudging there. So I would include the internal statements, and we have had some success in submitting those, have not had any applications kicked back to us for that reason. That could change, but that's the current situation.
Okay. And another question we've got is, can a bank make their own terms and interest rate on a payroll loan, or are the rates all the same under the CARES Act or the SBA?
Under the CARES Act, the interest rate is set at 1% by the SBA.
Okay. Thank you. All right.
And just as an FYI, the governor signed an executive order doing away with doc stamps for PPP loans.
Okay. All righty. And of course, we're getting the question: can any realtor apply for a business loan under the stimulus? Should they need to be an LLC or corporation? And we have already answered that. Independent contractor status, 1099. Talk to your banking professional and see what relief and submit that way. And right now we're getting. Go ahead. I'm sorry.
That's okay. I apologize. I didn't mean to interrupt you. Most banks have the application on their website. So if you go to the website, a lot of them will link you directly to the application and have some core instructions on what to do with it. In fact, most of the submittals are online.
Gotcha. Okay. All right. And we're getting this question a lot, so we're going to go ahead and throw it out there. What do you think the virus will do to our real estate market? I'm going to jump in on that one first, if y'all don't mind, and then the rest of the panelists can kick in. One thing that I've been telling the media, and we've been portraying to the media, is we are in a global pandemic. We are not in a housing recession. So right now, is it going to affect the real estate market? It's going to do something to the market. We don't have the March numbers, but right now what we are seeing is all the transactions that were in the pipelines that are still closing. Um, but is it going to affect it? Yes. And what it's going to do is we don't really know at this point because we're going to have to wait, you know, maybe 6, 8 weeks down the road to see what's happening to listings and purchases and stuff like that. So that's where we're at right now. We can't give any hard data at this point, but a little sneak peek at the stats is we are seeing some falling off, but we don't know how much is going to happen. But one thing about our members, they are being innovative out there. They're still listing properties. They're still showing properties, be it virtual showings and things like that. So that's one thing that is still happening. So just stay tuned for what's going to happen to the real estate market because we don't know at this point. So that's my 2 cents worth. Is any other panelists want to throw any thoughts in on that as well? Okay. All right. So what I like to do now, you guys, is the questions have been coming in. They've been repetitive. We've answered. One of them just came in. Is there an income cap for filing for unemployment? And I guess, Steve, would that be your realm on that one?
I don't know if there is a cap on that or not. That's something that would need to be discussed with the Department of Economic Opportunity, and they can tell you if there's a cap. There is if there's a cap in order to be eligible for that. I know there's a minimum amount of money you have to make in order to be eligible. I don't know what that minimum is, but there is a minimum amount. But those are questions I think that, given the situation in the pandemic, would probably be best be answered by the Department of Economic Opportunity.
Gotcha. And Larry, you mentioned a while ago the 100,000. That was for W-2 employees on the payroll protection. Am I correct on that?
That's yes. I expect that's going to apply to the 1099s too. Let me try to look real quick. Yeah, in reading it, it's limited to $100,000 for 1099s also.
Okay, thank you. All right. Any other questions for us from the? Are we good?
That's it.
That's it.
One other
Okay.
question.
Yes. Go ahead.
Just to follow back up with what you asked before on the Department of Economic Opportunity, it says in order to establish a claim for benefits, you must meet the following requirements: having been paid wages in 2 or more calendar quarters in your base period, have a total base period wages of at least 1.5 times the wages in the quarter having the highest earnings, and have at least $3,400 total wages in the base period. So you have to have 2 or more quarters in your base period, and you have to have at least $3,400 of total wages in the base period in order to be eligible under Florida law.
Okay. Okay. Well, I appreciate that. What I'd like to do is extend my sincere gratitude to our 3 panelists for taking the time out of their day today to help our members, hopefully give some information, help them maybe manage their business and take care of their families a little better. I know over the past week or so, I've learned a great deal, not only from today, but just going through the different websites. One thing that I do want to stress to our members, Aura has a information page on the coronavirus. You can go to that at orlandorealtors.org. Florida Realtors has a coronavirus page that keeps updated information on it as well, as long as our National Association of Realtors site at nar.realtor, their coronavirus page. A lot of this information, and it's changing daily, it's fluid, but there's a lot of information that you can get from these different sites. So we really appreciate everybody joining us today. These are going to be ongoing informational webinars for you. So if you can, join us tomorrow for Aura's next live training, which is going to be a Zoom webinar featuring our past president, Zola. And Zola is going to be talking about mastering your new norm with productivity techniques. So you can pre-register for the webinar on our orlandorealtors.org site. And everybody should have got an email today talking about a virtual text you can sign up for to let you know when these webinars are coming up. So if you text the word virtual, 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 to 64600, you'll get text messages when the upcoming webinars are. And also, if you don't mind, follow us on Facebook, Instagram, and LinkedIn to stay informed on the latest news and issues. And if you want to write down this email address, GA for Governmental Affairs, GA at orlandorealtors.org. If you want to give us any comments or suggestions for any future town hall meetings, please email them to the Governmental Affairs, and we will see what we can do. We really appreciate you joining us for our first town hall meeting. Hopefully it wasn't too painful, and hopefully we done good for you. But give us your suggestions. Let us know what you want us to try to put together for you, and we're there for you. And as always, thank you for being a valued member of the Orlando Regional Realtor Association. And I wish nothing but health and safety both to you, your families, and our customers and clients as well. And thank you for allowing us the honor of serving you. Thank you.